Okay, good morning, everyone. Looking at the US stock market, the Dow has earlier recovered from the EMA 60, which is around the 25,000 psychological level. Since then, the Dow continues to form the higher high and also the higher low formation, forming the recently breakout pullback just towards the EMA 20, and the continuation pattern was being established as the Dow has touched a fresh all-time high level. So for now, we expect the momentum to continue for the Dow to trend towards this next resistance located towards the 27,000 psychological level. In the meantime, the EMA 20, which is around the 26,300 points, will serve as the immediate support level, followed by the 25,750 points on the Dow Jones Index. Gains on the Dow Jones, about 122 points overnight, was mainly underpinned by Caterpillar and also Intel Corporation. On the broader market, the S&P 500 has recovered from the 2,700 psychological level. Since then, we did saw the S&P 500 has been forming the high and also the higher low formation being supported along the EMA 20 level as well. So after hitting the recent peak of around the 2940, we are seeing some of the mild weakness on the S&P 500 trading back just towards the 2900 or the EMA 20, and the recovery was resumed over the past couple of days. Despite the Dow has touched a fresh all-time high level, the S&P 500 has formed the dodgy candle, mainly due to the lingering concern over the trade spat with China. So for now, until we can see a breakout above the 2940, then only we can confirm for the S&P 500 to trend towards a new high towards the 2950 or even towards the 2970 level. In the meantime, a fall below the 2900 will see the S&P 500 retracing back towards the 2860 level. Okay, some of this on the crude prices. Crude prices continues to rally higher from the recovery above the 64 US dollars barrel level. Since then, we are seeing a good breakout, a pullback just towards the EMA 120, and the continuation pattern was being reestablished as the crude prices has breached above the previous resistance around this 75. The gains over the part on its previous day was mainly due to the renewed concern over the supply risk from Iran. So for now, we expect some of the mild weakness on the crude prices, given that crude prices has staged a 2-day strong recovery. A pullback for now, a healthy pullback for investors towards the 72 or even towards the 71, before the next recovery to resume towards the new high or towards the next resistance around the 80 US dollars per level. Crude prices has been forming the uptrend in dark orientation formation. The MA 20, 16 and 120 has been in line since the mid of September. Some of this on our local front, the FMKLCI continues to march higher, following the breakout above the 1700 psychological level. It trended towards the 1830 and subsequently staged a healthy pullback just towards the EMA 120 and traded on a sideways manner. So for now, we expect the FMKLCI likely to consolidate between the 1770 towards the 1830 level over the short to mid-term trading period. Until we can see a breakout of either of these levels, then we can confirm for the next trend on the FMKLCI. For now, we expect the FMKLCI just to linger around the 1800 on the key index. On the broader market wise, we are seeing the FM small cap index has earlier recovered from the 13,650 points level. Since then, we are seeing a good short-term bargain hunting activities on the low liners following the sharp pullback from the mid of August. However, the recovery did not last long. It just lasted only about 2 to 3 weeks on the FM small cap index, and on yesterday itself, we are seeing a renewed weakness on the FM small as the formed the bearish engulfing candle rejecting the EMA 60. So for now, we expect some of the pullback on the FM small cap index. If if the pullback were to fall below the 14,000 psychological level, then we might see further correction on the lower liners. In the meantime, any cap towards the recent peak around the 14,560 points level on the FM small cap index. On stocks wise, we can watch out for firstly will be a Muiba. Muiba has again recovered from the recent low of around the 2.72 level. Since then, price has staged just a mild recovery near towards the 3 ringgit the EMA 120 level and stage of just a one-day pullback and form a bearish candle. But the next day itself, on yesterday, we are seeing the Muiba has formed a bullish harami candle accompanied by some mild improvement in volumes over the past 2 to 3 trading days. So for Muiba right now, we're going to monitor for this breakout in one sense, a breakout above that and a closing above that, then you confirm for Muiba to trend towards the first target price located 3.19, or even towards the previous peak of 3.35 level. Your stop loss point will be located below the 2.88 if there's a breakout above the 3.01. And if you can take further risk, the final defense will be located towards the 2.72. On indicators wise, we are seeing the MACD histogram has already turned green yesterday, whereas the RSI has recovered as well. On Lihan, we are seeing Lihan price has formed some of the bullish divergence signal as price has traded lower, but the MACD indicator has been forming the higher low formation. Since then, we did see the confirmation of the bullish divergence recovery above the 2.45 level. During the recovery above the 2.45 level, we are seeing some of the high volumes being traded on Lihan, and subsequently price has been traded on a sideways manner since then. So for Lihan right now, we're going to monitor for this potential short-term consolidation breakout between the 276 towards the 3.07 level. Given that the uptrend in the orientation formation was recently established, the MA 9, 20, 60, and 120 has been in line on Lihan. This gives me a minute for the chart to load. There's some issue with the connection, internet connection in Subang Jaya. I can't display the chart on Lihan right now, so I'll move on to another stock. On Powerwood, we are seeing price has recovered from the recent low of around the 1.04. Subsequently, price has formed the higher high and also the higher low formation over the past couple of months. The uptrend in orientation formation was also being reestablished since the mid of July. The MA 9, 20, 60, and 120 has been in line. After touching the recent peak of around the 1.68 level, we are seeing Powerwood has staged a pullback just towards the EMA 20 level, and on yesterday we are seeing a good bullish engulfing candle was being formed, implying that this could be the potential short-term breakout, pullback, and a potential continuation pattern for Powerwood to retest the 1.68. That will be the immediate target price for now. Should the 1.68 were to be breached, further upside will be seen towards the 1.82 level. Your stop loss point will be located below the 1.50 on the Powerwood. On indicators wise, everything appears to be quite positive right now. Following yesterday's bullish candle, we are seeing the MACD indicator has received issued buy signal. MACD histogram has already turned green, whereas the RSI has risen above the 50 level as well. on ATA IMS, we are seeing price has formed the recent rally. Subsequently, price stage just a 2-day pullback towards the EMA 9 level, and on yesterday itself, we are seeing a good bullish candle was being formed. And during this period of time, the uptrend interrogation formation was also established. The EMA 9, 20, 60, and 120 has been in line on ATA IMS. So for now, we need to monitor for the record above the 1 ringgit 1.70 level. Should price breach above the 1.70 level, then we can trade towards the first target price of 1.80 cents, or even towards the previous high of 1.88 level. Your stop loss point will be located below the 1.63 level. On indicators wise, everything appears to be very positive right now. As you can see that during this period of time, we are seeing the MACD indicator has been forming the higher high and also the higher low of formation, despite the price has just been traded on a sideways manner. So this could be the healthy consolidation phase following the recent the previous breakout, the previous rally, a pullback, a healthy consolidation, and this could be the next wave of a rally for this counter. Last two company for today, firstly will be a Taliwork. Taliwork has earlier formed the strong breakout above the 98 cents level. Subsequently, price has staged a strong rally, a pullback just towards the EMA 60, and the next wave of our rally was noted as price traded towards the recent peak around the 1 ringgit 49 cents level. After touching the 1 ringgit 49 cents, we are seeing a healthy consolidation on Taliworks over the past 1.5 months trading period between the 1 ringgit 35 towards the 149. But over the past 2 trading days, we are seeing some of the higher volumes being traded on Taliwork again. So for now, we need to monitor for the breakout above the 1 ringgit 49 cents. Should price breach above the 1 ringgit 49 cents, we expect price to trend towards the 159 or even towards the 1 ringgit 76 cents level. Your stop loss point will be located below the 1 ringgit 35 cents level on Taliworks. Last company for today will be Nilex. Nilex is still in a downtrend formation, so for now, any recovery will be just taken as a technical rebound play. Nilex has earlier recovered from the recent low of 61 cents level. Subsequently, price has staged a good recovery just towards the 73 cents level. After touching the 73 cents level on several occasions, price subsequently pulled back and traded a sideways manner. But on yesterday itself, we are seeing a good gap up formation on Nilex as price has once again retested the EMA 60 level, accompanied by some of the rising volumes over the past 3 trading days. So for Nilex, what we need to do now is we're going to monitor for this short-term consolidation breakout above the 67.5 cents level. Should price be above the 67.5 cents, we could trade Nilex towards the 73 cents or even towards the previous high of 80 cents level. Your stop loss point will be located below the 62.5 cents level on Nilex. If you have any questions, you can put in the chat box and I'll reply shortly. QAS, alongside with most of the smaller related ACE market companies, has staged a strong rally over the past 2 months trading period. AS similarly has then breached above the 20.5 cents level. Subsequently, price staged the short staircase formation is just a sideways pattern just towards the EMA 20. Once again, it rallied and pull back just towards the EMA 9. So for now, for QAS, you need to use the daily EMA 9, which is currently located at the 33.5 cents level as your trailing stop loss or trailing profit. Should price breach above that, then you have to cut loss or take profit immediately. A lot of lower liners, QS is one of them, is on the should be on a pullback phase, given that the earlier I did mention that FM small cap index has formed the bearish candle. ACE market is also traded, is also forming the bearish or the dark cover candle yesterday. On the FM ACE market, we are seeing the ACE has formed the hammer candle along the 4,960. Subsequently, price has recovered. It traded just towards the EMA of 120 level, and yesterday we are seeing the bearish candle was being formed as price a gap down and reverse all its previous sessions again. On indicators wise, we are seeing the MACD histogram has returned red. RSI has tripped below the overbought position and is pointing downwards. So we could see some of the profit-taking activities on the small cap and also the ACE stocks. So any pullback below their immediate support levels, then it's advisable to cut loss or take profit immediately over the near-term period. But if QS managed to recover above the 37 cents level, then your gains will be located towards the 40 cents. If price managed to stage a healthy pullback towards the EMA 9 and recovered, similar like earlier on, then your gains will be located towards the 40 cents level for now. If there's no further question, then we'll end the morning briefing for today. Thank you.